Our next guest says this year's big market run isn't over just yet. Let's bring in Keith Parker. He's the head of U.S. equity strategy at UBS. Welcome. It's good to see you.
Good to see you.
Heard, I presume, part of this conversation, and you heard what Kyle Bass has to say. Why do you have a bullish nod?
Yeah, I think if you rewind back to your comments, global PMIs peaked in December of 2017. Typical timing of a cycle would point to a July trough anyway. And what's driven that slowdown in global growth? It's been a collapse in trade activity. 2/3 of the slowdown in Europe and China driven by that collapse in trade. So what starts that external demand stimulus to us is some outcome of a positive trade deal, and you get that restarting of the growth engine at a time where the Fed is on pause to take us to new highs in the second quarter.
You don't think we pulled forward a sizable amount of the gains that we could have realized for the latter part of this year? We've got 20% from the bottom.
Yeah, our call was that we get about 10% from the re-rating in the multiple, and in years after big PE declines like we saw in 2018, you typically get about a third back, and that's where we are. And so for us, the next leg higher needs to be next 12-month earnings peaked in August, and we need that roll up as growth starts to resume for new highs.
Where do you think that comes from, Keith? What sector is at least most likely to rebound from what has been this stagnating growth?
Yeah, I think it's been energy, which we've seen contribute about a third of the decline in the earnings estimates. So we like that as a laggard theme. And then on the leader side, we have tech and healthcare as that's sizable growth. And then the consumer, which we do see some weakness in the first quarter, is key. And again, some sizable growth in that sector as well.
What do you make of sort of what's been going on in tech? Sort of a below surface story. Software and semis doing the bulk of the heavy lift while the FANG names have sort of not sat it out, but have underperformed those other areas. What does that tell you about that sector? Yeah,
I think on the semis front, I would put that in the theme of the too much was priced in the fourth quarter, and you've had the bounce and the re-rating on the expectations that just stabilization and some hope for the second quarter. I think software is that theme of leaders where there is still strong growth. We saw a few wobbles in recent days, but again, and then on the FANG side, it's been more selective. It hasn't been that broad-based bid for those stocks, but we have seen select good performance to start the year.
Keith, is there a specific area of healthcare that you like, or is it the sector in general?
Yeah, we've been tilted more towards the equipment and the growth side, and selectively on the value. We do see some in biotech and parts of pharma that we do still see as relatively cheap, but in aggregate, we do see that as a core defensive growth against staples and utilities, which we see as fairly rich.
Karen, you got one quick?
Yeah, where do you think of financials and industrials in the spectrum of stuff that you like?
Yeah, we've been tactically overweight industrials against that same view that too much was priced into this year. It's been the best performing sector to start the year. And on the sidelines in neutral financials, as we thought rates would take a little while, to the extent, as you mentioned, we get the Fed back talking rates a little bit higher in the summer. But in that meantime, we've been a bit more selective in the space.
All right, Keith, it's good to see you. Thanks for being here.
Great. Thank you.
All right, Keith Parker from UBS. You've been pointing out the weakness in the FANG trade, which we just mentioned.
Yeah, so we talk all the time. How do we get back to those prior highs? And, the way I see it, we just covered two sectors that really need to do it. And to me, it's banks. I've never seen a market make new highs in all my years if it wasn't really led by banks and then broad-based in like mega cap tech. And so, they've sat it out, but it's interesting that FANG, MAGA, whatever you want to call it, has picked its head up in the last week or so as the S&P has stalled out. Well, I call it MAGA. I think a lot of our viewers call it MAGA. It's the Microsoft, the Apple, the Google, the Amazon. And they're starting to kind of move. I would love, if those were to be the leadership back towards 2,900 in the S&P, that would be a very bullish thing.
When have banks been leading this market higher? I mean, you're talking about banks have had to have been the answer for the last 2 years when the market's gone higher. And I don't think banks at any time has been a high conviction call, and yet the market's moved higher.
Well, I mean, it hasn't. I mean, if you go back and look, where were the banks when we made those highs in January of 2018? They were at their post-crisis highs. So what I'm saying is to have a broad-based rally to make new highs. Think about where we're coming from now. The S&P was at 2350 just a couple months ago, and those prior highs are 2930. To go all the way up there and meaningfully break out of what is going to look like a very long consolidation, you're going to need some new leadership, and you're going to need MAGA to do the heavy lifting, and you're going to need the confidence in the banking sector to actually broaden it out.
You want to?
I'm long the banking sector. Today there was what?
So you have confidence.
I have confidence. I'm long the banking sector. Today was sort of uneventful, but I like the space, and I think if the economy is doing well, and I do think we'll get a trade deal, I think the banks will be fine. I don't think that there. I agree on MAGA. I'm long Alphabet. That's my biggest position, actually. I agree, and it has sort of, secretly in the last week or two, actually performed very nicely.